I'm Owen Bigland. This is the Inside Edge video blog. Okay, viewer mailbag. I always get tons of questions here on my YouTube channel. I had a couple of good ones here. You guys, I do my best to try and respond whenever I can, either in the comment section, although some questions, it would take me half an hour to type out, so I just don't have the time. But I try my best anyways, and I'll often put some notes aside here and try and answer some of them on my YouTube channel here on my video blogs here. So I had a guy, Owen. As you guys know, I've done multiple blogs on how nothing is getting built in downtown Vancouver. This is probably the biggest news item there should be happening right now. The mainstream media doesn't talk about this at all because they're always a buck late and 5 days short, or $5 short and a day late. Everything, it's really unprecedented. Probably 6-7 stratified condos, but they're all going to be luxury, have all been scrapped now in favor of now building rental-only buildings, market rental for the most part. But people are still confused. Why are they all changing over, Owen? This guy had said, hey, I missed the point on the videos. Can you explain the reason why these condo developments are switching to market rent developments? Is it because there were going to be requirements for affordable housing within the stratas? Otherwise, I don't see why they wouldn't build stratified condos. So I'm going to answer that. Clearly there's a reason. So he'd also asked me about my traveling. He knows I travel a lot to LA. I just got back from New York, Phoenix, asking me about the Miami area, which I also was just at recently, and Brickell. He wanted to know, a lot of these strata in Florida are facing major assessments. How do I feel about the U.S. market compared to Vancouver? So I'll touch on that here quick, and then I'll answer one other question here too. So as far as, go back and watch my other blogs on why the reason for this is, because I have addressed it on why these, what were going to be stratified condo have switched to rental. There's a number of factors here. The first thing is a lot of these in the West End, these buildings were rental buildings. They've been boarded up in some cases 2-3 years ago. They kicked out all the tenants and boarded these up. They put the development boards up and it was going to be luxury condos, 35, 40, 45-story towers. And that was the way it was for 3 years. COVID hit, they got booted over, the development boards. Now recently they've all been changed to rental. Well, I talk about what's called the absorption rate. With the current interest rate environment we're in right now, where we've had 11 interest rate hikes, the absorption rate is these developers are all kind of in cahoots with each other. One might have a lot over here in the West End, or a couple of lots. One might have one in Cole Harbour, Yaletown. They talk about when are we going to pre-sell these, and the pre-sales on these were all going to be luxury condos, as I've told you guys. The days of anything affordable are long over. These were starting at upwards of $2,000 a square foot for a low floor unit, up well over $3,000 a square foot. So as I said before, there's only what we call the absorption rate. There's only so many multi-millionaires, because that's what these buyers are going to be, that can buy these luxury condo units. So they can't build 7 or 8 of these in one shot and have 8 or 900 units hit the market. We've already got a little bit of a glut of luxury condos already in the tangible market in the $2, $3, $4, $5 million range, because it's a rare buyer for those. So what they do is they kind of slowly trickle in the supply. There are a couple of developments now getting finished up in Cole Harbour. There's a few more coming online soon, but they will gradually kind of slowly trickle these in. All these ones in the West End, the developer was kind of up against it here. It's like, well, gee, I don't want to build right now anyways because interest rates have gone through the roof. I'm going to be marketing these at $2,000, $2,500, $3,000 a square foot, so that's a limited buyer. So that's why they've been sitting on these. Now, of course, the city now has gone to them, and I'm not privy to all the deals, the back room deals that these developers do with the city and with the province. But essentially, they've come to them cap in hand saying, we need more rental housing. I've talked about this many times. Developers, the big developers generally do not want to build rental stock. It's not their forte. It's not their game. They want to build strata. They want to secure the land, get all the permits and everything put through. That'll take 5 years. Pre-sell the condo, build it, get their money, and move on to another project. But the city, of course, and the province, and I'm not privy to all this stuff, but they, of course, have been sweetening the pot to these developers to build us some rental stock. So there's all kinds of things they're doing. They're giving them all kinds of tax abatements, all kinds of added density on other projects they might have for condo down the road. Let's put it this way. I've talked about this before. When you're dealing with the province, the NDP especially, and the developer, I can tell you who the smartest guy in the room is. It's always going to be the developer. These guys are in a completely different league. If anybody thinks that the city of Vancouver or the NDP is getting the better of these deals with a developer, you're dreaming. So I don't even know. Maybe someone can chime in. I know they're getting lots of incentives to build these because they really don't want to. And so that's the situation we're at. And again, what I've said is the repercussions of this are going to be felt 5, 6, 7, 10 years down the road. 10 years from now, in the Vancouver Sun, if it's still around, which it won't be, you're going to see articles, well, where did it all go wrong? As I say, downtown Vancouver for multimillionaires and struggling renters only. Because it's great to build the additional rental stock, but it's coming at a cost of building condo. And even though these condo are going to be luxury, it allows the people in the less expensive condos, that's what they move up to, and free up the 1,200 a square foot units, which is going to seize all of that moving forward. You'll see. Read the room. Second question I got from another viewer here. It's another good question. Owen, longtime viewer. Have you ever regretted selling a place you owned, assuming you sold it to invest in the stock market, etc.? Do you still own your first principal residence? In an old video, I recall you mentioned you sold your detached home. Would you consider that a mistake you've made? No, absolutely not. I have never regretted the few sales that I have. Yes, I've had multiple principal residences I've sold over the years. The previous principal residence I had to what I'm currently living in was a large detached home. It was a fantastic house in West Richmond, large home, way more house than what I needed. I owned it for almost 13 years. I did incredible on it. I mean, just the sale of that house alone made me a millionaire, but I was already a millionaire before that. But that's what buying and holding your principal residence will do for you. As I've said, it's minted more millionaires and multimillionaires in this country than all other sources combined, just buying and holding your principal residence. But the reason I've never had, and I can tell you that every house that I've sold, all my principal residence, as well as a couple of investment homes over the years, have all gone up substantially, because that's all they do. Of course they're going to go up over time. So they've all gone up substantially. But the reason I don't have any regrets is because I've never tried to time a market, of course. Anytime I've sold a principal residence, I've moved into another home. I've used it to move into a bigger or better home, or in the case of me selling my last detached home, it was a downsizing move. My wife and I just didn't need that space. I got a price at the time that I never dreamed I would ever get for that home. And we wanted to simplify our life a little more. Now I live in an incredible condo in downtown Vancouver. We did a full renovation to it 4 years ago, so it's been completely customized to my needs. And it's in walking distance within about 80% of the business I do downtown. I walk to my showings and appointments, which is fantastic. I've got the seawall here. This was the lifestyle that I wanted. It was a lifestyle move. And remember that. I've talked about this before. I talk about it in my book. Not all real estate purchases are based on investment or what's going to appreciate the best. In my early years, that was definitely top of mind. But eventually you get to a point financially that isn't the all and be all. Sometimes you would make a move for a lifestyle change. And for me, it's been great. I wanted something, I travel a lot, I could lock up. I was getting tired of the lawn care. I was getting tired of the battle with the raccoons and the squirrels and all that other stuff that goes with owning a big detached house. The boiler going and the furnace and the upkeep with the home. Now I can lock up, go down to California for a week and not worry about anything. I've got a pool, I've got a gym, I've got everything at my fingertips here. So no, I have never regretted selling a home because I've always used that money to buy something else. I'm never out of the market. And it's the same thing with the few rental investment homes I've sold. I've sold a few, very few. But it was always to buy other properties or consolidate to buy multiple properties. So what I'm saying is you never want to sell because you think the market's at a peak. Take your money off the table and wait a few years and then try and buy back in at a better price. That is a fool's errand. I've done lots of blogs on it. So the short and sweet answer is no, because I'm always, whatever I've sold, I've bought something with those funds, either moved up into something better, or because of lifestyle and just looking to downsize and simplify, I've gone from a detached home to a condo. But it was a lifestyle change for me. Final thing, if you guys follow me on Twitter, if you're not, you should, just to go back to the stratified condo that we're going to get built and now moving to rental. I did a simple synopsis here about the Vancouver market in the next 10 years, let's call it. Construction costs continue to go up, and they are. They're not going to go down. Every year, the cost to build a condo or a detached house or a townhouse is going to go up. Complexity and red tape developing any properties in Vancouver is continually getting harder and harder too. Just look at in the newspaper, every day you're seeing stuff on zoning, and you talk to a developer, they'll tell you it is a gauntlet trying to get anything built. And of course, now with the interest rates they are and the uncertainty with government and interventions and all that other stuff, it's just getting more and more complex. Most markets are chronically undersupplied. Vancouver, how many blogs have I done on that? Nothing for sale. It's always pretty much in a buyer's market here, a seller's market. Occasionally we get into balanced territory. The reason for that is just not a whole lot for sale, and it's gotten a lot worse with interest rates going up. Sellers now are staying put because they don't want to sell and then have to take out a new mortgage at a substantially higher mortgage rate. You're seeing that in the U.S. Home sales or inventory in the U.S. is at all-time historic lows, and we're probably that same thing here. Minimal new supply, so look no further than the few stratified developments that were online here for downtown have all been scrapped. They're all going to be market rentals now. So, lack of supply, no cavalry on the way. Supply is not going to outstrip demand. Demand keeps getting higher. So if you add it all up, over the long term, prices are going to continue to rise. And if you don't see that, then I don't know where you're at here. Tough to get anything built, no cavalry on the way, we're chronically undersupplied, population continues to grow, and if anything too, we did have a headwind for interest rates up until recently. Now it's probably going to be more of a tailwind over the next couple of years. So for that reason, I don't have a crystal ball, but what I told this guy on Twitter, over the next 10 years, I would expect prices to be higher, and in a lot of cases, substantially higher. I'm Owen Bigland. As always, thanks for watching. Thanks to all my new subscribers. And if you're not following me on Twitter, check me out on Twitter as well. See you next week.